That is correct, Gerard.
That looks great.
This is my second time at the Blockchain Summit, and I'm really thanking you guys for having us speak here today. My name is Brojde. I'm the co-founder and CEO of Estatebly. We're a company based out of Montreal, and we are driving significant transformation in an industry that has really over the past 30, 40 years not seen any type of innovation. So today I'm going to talk about how distributed ledger technology can help accelerate jurisdictionally compliant estate settlement. Going through today's agenda, I'll talk about some of the current issues in estate settlement, how distributed ledger technology can help solve some of those issues. Once we decided that DLT could in fact be extremely helpful in this process, we had to select a framework on top of which to build our platform. So I'll walk you guys through some of that decision criteria. The mission of the company is to facilitate near instant settlement. And in order to achieve that, we're going to have participation on a network from multiple parties. And obviously creating a multi-industry consortium has its challenges. I'll describe some of those challenges and then offer some solutions on how we're going about to solve those. And hopefully if we have enough time, I'll let you open up the floor to questions and answers. So I'll start with a little bit about my background. I come from a financial services background. I worked for two of Canada's biggest banks for over 14 years. And towards the end of my stint at the bank, as my customers got more sophisticated, I started having a tremendous amount of problems collaborating with my customers' other financial professionals, their lawyers, their accountants, their insurance people. And started noticing in 2013, 2014, the wave of fintech companies coming in and either disrupting our industry entirely or offering technology tools to help us do our jobs better. And so in 2014, I left my post at the bank and started a fintech company that aimed to create what's known as a virtual family office, a way for the different financial professionals to collaborate together. Now, that sounds glamorous, but it turns out that no one was really waking up in the middle of the night screaming, I need to get myself a virtual family office. But one of the interesting outcomes from our sales meetings was that a consistent piece of feedback was that the system that we had created to inventorize and track customers' assets would be extremely useful for estate settlement. And my experience at the bank was mostly in estate planning. I didn't know much about estate settlement, so my partner Alex and I spent a significant amount of time at the beginning when we formed the company to really speak to anyone we could that would give us an hour of their time to help understand what kind of problems and pain points existed in the industry. So those are people in trust companies, major accounting firms, law firms, and notaries, but we also realized that governments play a crucial role in the estate settlement process. So we had some contacts at the government, and we spoke to them as well as to some citizen executives. And what we found were four main things about estate settlement. First, at its core, estate settlement is a process whereby multiple participants need to come together in order to settle one particular estate. They each use their own systems of record to record their version of the truth with regards to the estate. And because they each use their own different system of record, and because there's legal liability that is attached for missteps in this process, no one trusts one another. Second, when we spoke to staff doing this professionally, I mentioned before about the wave of fintech disrupting or aiding financial professionals. The people that are doing the grunt work in estate settlement are still working with pen, paper, and Excel sheets. And they're extremely frustrated when they come to the office, used to great levels of automation in their daily lives, and seeing their counterparts at different financial services branches using technology that they have so little automation in their daily work. When we spoke to managers, they're extremely concerned about regulatory compliance and the high costs that are associated with maintaining compliance. And finally, there was a great lack of transparency that they talked about. And that lack of transparency really exists on two different levels. On the first level, from managers, they have virtually no real-time insights into the activities of their staff. And from beneficiaries or customers, they have no visibility into the estate progress of where the estate is at. Like those trust officers that I mentioned before, they're used to being able to go onto Amazon or Domino's Pizza, order something and be able to track its progress from ordering to delivery. And here there is a 18 to 36 month process onto which they have absolutely no visibility to what's going on. So I mentioned that this process, the average time it takes to settle an estate in North America is between 18 and 36 months. And one of the things that we asked everyone who's involved in this industry is, what exactly takes so long? And they identified 4 main process-related pain points that were really responsible for the lion's share of the delays in estate settlement. The first is discovering the customer's or the deceased assets and subscriptions. This problem is compounded by the fact that obviously the deceased isn't there to tell us what he or she owned. But also in an increasingly digital world where people are paperless, the traditional approach was that the executor would show up to the home of the deceased and would wait for the mail to come in. And based on what they saw in the mail, the person used Verizon for their cell phone, they used DirecTV for their cable, so they would amass an inventory of what was owned by the deceased. But in an increasingly paperless world, you can sit at a home until the cows come home and not discover those assets. Second is what is referred to as interbank settlement, and that's the process whereby the deceased financial accounts are repatriated to an estate account that is presided over by the executor. Third is obviously the probate process, which can add 6 months, and that process is really about validating that the will that is submitted to probate is indeed the last will of the deceased, and it also grants the authority for an executor to act as the legal representative of the estate. The last one is, in Canada, what's called a request for tax clearance, and this is akin to a closing letter that the IRS would offer Americans. And that process, they say, can take up to 9 months. So, how can DLT help solve some of those issues? Picture a world where every single service organization that one deals with during their lifetime, or even across the world, could enter into a network where they can share seamlessly information about an estate. Now, this would include almost every funeral home, every telecom company, every financial institution on the planet. But of course, in reality, none of us have all those relationships. We only deal with a small subset of that. So what if, upon one's death, these individuals with these organizations with whom one had relationships could be activated and form a network in order to help settle an estate? I'll give you a concrete example, and it has to do with the account closing procedures. So today, if you were to call a telecom company and say, hey, I'm the executor of the estate, and I'd like to, I'm representing the estate of this deceased person, we have an account with you, account 1, 2, 3, 4, 5, we need to go ahead and close that account. Their response to you would be, prove it. So what the executor needs to do is he needs to get a copy of the death certificate from the death certificate issuing body of whatever state he resided in, and also has to provide proof of executorship from the probate court. He then needs to assemble a package, submit it to the telecom company along with a letter of instruction to close the account, and then because the service provider doesn't want to close an account where they shouldn't be closing one, they have to visually certify that the death certificate is authentic and that the letters of probate is authentic as well. If those entities were able to participate in a network, you would remove that step completely. Information could flow directly from the death certificate issuing agency and the probate court directly to the telecom where the account needs to be closed, and they could have assurance that those the deceased is dead and that the executor has the legal authority to act on behalf of the estate. With interbank settlement, this process could take up to 6 months, and there's a ton of back and forth that goes on between these financial institutions in the sense of incomplete documents, mismatch of the clients reported by the executor versus what the financial institution has. And if all these financial institutions can participate in a network where the rules of engagement are defined before and the governance is defined before, you could really expedite that settlement process. And when we've spoken to the CEOs of the trust companies at the major banks in Canada, all of them want to sit down at the table and figure out how to get this done. So once we decided that, yeah, DLT could be a very good use case for a state settlement, we need to figure out what framework on top of which to build a platform. And we knew that we wanted a distributed ledger because that would enable a layer of trust that doesn't exist today. But second, we realized that the state settlement and the states have very sensitive information that can't be shared publicly with anyone who has access to the internet, as could be achieved with a Bitcoin blockchain. So we realized we needed a private blockchain. We also wanted to reduce friction towards adoption amongst major financial institutions. So we wanted a platform that would allow us to operate with no native code. The state settlement is a process that has a tremendous number of regulatory rules associated with the state laws, firm-specific procedures. So we wanted smart contracts support to be able to codify those rules and automate a lot of those processes. And in terms of privacy of information, we realized even though in a private network, everyone has permission to access information on a network, there are cases in business rules where there are certain transactions that should only be available to a few parties. And one of the things that Hyperledger Fabric had created was the notion of dedicated channels where only 2 or 3 organizations could be privy to the information on those channels. We also liked Hyperledger Fabric because at the time that we began development, it was the first enterprise-grade, production-ready environment, and also the fact that it was open source, meaning that some of the greatest software minds in the world would be working towards creating better solutions. There are several benefits in states where they had internal process inefficiencies and what was really creating the most backlogs. And then that same information could be rolled down to their customer base and provide them more transparency into a self-service tracking. Yeah, go ahead.
So these are great benefits. But one of the things you brought in was 18 to 36 months. Does it do anything to help speed up the process?
Well,
I would think it would.
I'm going to get to. I'm going to get to
straight.
Yeah. Okay. I'm going to get to that. In terms of smart contracts, they help significantly automate a lot of the tasks that are done today manually. As we mentioned before, there is a tremendous amount of manual labor that is needed in state settlement, and the more you can automate those tasks for those essentially those administrators, the higher their employee satisfaction can be, and the greater their retention. One of the biggest problems that we've understood when we spoke to these big companies that sell trust in the states professionally is that there is a tremendous amount of poaching that goes on within the industry because settling in states requires a certain level of expertise, and when a trust officer leaves, they leave a void. Also, firm-specific procedures and local estate laws can be embedded into those into the workflows in order to ensure greater compliance, to reduce the amount of training requirements. We've heard that it takes almost a year to bring a new trust officer up to speed to settle estates. And by having all the business logic embedded into the workflows, you can have someone with a university degree really come in and start settling estates on day one. For national firms, what often occurs is there are certain times where there are bulges in the state settlement demand, where there's just an inordinate amount of customers dying in a certain region, and they have to deploy officers that have expertise in one jurisdiction into the other one. It takes them a long time to figure out the new rules in that jurisdiction. So embedding those business processes has a very great effect. In terms of privacy and security, like every large organization hears about these new cyber attacks on a weekly basis, and they're becoming more and more serious about protecting the privacy and security of the information that they hold in custody. The confidentiality of information is assured in Hyperledger Fabric by the notion of dedicated channels that I spoke about before. And in the most recent version of Hyperledger Fabric, they came out with a very innovative solution towards GDPR compliance. GDPR compliance is a big topic amongst executives at financial institutions. They know it's coming at a certain point, they just don't know what form it's going to take. And but the right to be forgotten, which is one of the key principles in the GDPR framework, is really at odds with the blockchain system that by nature, the ledger is immutable. So how do you balance those two? So what they've created was a notion of private data collections, which allow people, or organizations, to hold information off-chain, such that if a customer will call and say, hey, please delete my data, the hash that points to that data will just point to an empty record. So resolve both issues. On the security side, the data integrity is assured by the immutable nature of the ledger itself. In terms of permission access, it's controlled by certificate authorities and membership service providers to ensure that only people authorized to write to the blockchain have the capacity to do so, and uses advanced high-level data encryption to ensure that only people with the appropriate private and public keys can access the information. So, the mission of our company is to facilitate near instant state settlement while at the same time maintaining compliance with the jurisdictions in which they operate. And with what we know about what blockchain can do in terms of expediting settlements for things like payment, what Bitcoin has done, for instance, with its ability to allow two people that don't trust each other to settle a payment without the need of a third-party intermediary. One would think it would be a natural step that the state settlement could be done as quickly, but the one differentiator between the state settlement and payments is there is a tremendous amount of process-related compliant issues that one needs to go through. And for purposes of illustration, I've presented this workflow of what the estate settlement process looks like in our beachhead market in Quebec. And it's not important for you to see what these processes are, but really to give you a sense of the sheer number of participants that are involved in this ecosystem, the number of documents that need to be created, and the number of databases in which information is held. And if you were to zoom out even further at this from the perspective of the trust officer who's settling in the state, you see really two categories of processes. One are processes that are internal to a professional firm that's settling the trust, and the other one which is external. The difference between the two is they are in control of their internal processes. They can optimize them and maximize their efficiency. External processes they have no control over. This is, for instance, when they send information to a government agency and they're just waiting for that to be produced. So we realize that any solution that attempts to expedite the state settlement really needs to sit at the intersection of the internal processes of a financial firm and the external parties that need to participate in the system. And so that's why we built a layer that sits in between these two. The system that we've developed has essentially two components. One is the core application layer that holds the user interface as well as the business process logic, and the second is the blockchain layer that serves to hold the state-related events on the ledger, as well as the smart contracts that help to manage the operations of the ledger. We've started with the lower section here, working with the trust companies in Canada to help integrate their various systems. Now, the average company will work with over 10 systems, and they're each in their own silos, so it's very hard for them to communicate with one another. Obviously, you don't need blockchain to create integrations amongst various systems. You can use something like an enterprise service bus, which would do the same thing. But the real benefit of the blockchain is then to be able to take information that comes internally and send it to those external networks that we're eventually going to create to help expedite the entire process. So clearly, in order to reach our mission of near instant estate settlement, we're going to require the participation of a number of external parties. And that presents a significant challenge. But luckily, we are not needing to blaze a trail in this space. There's a company in Canada that's a digital identity verification provider called SecureKey, and they've just launched a blockchain-based identity verification platform by the name of VerifyMe, and they have some of the biggest banks in Canada, the biggest telecom companies that are part of this network. And what they did was to approach the executives of the telecom companies, for instance, and they said, out of all the metrics that your shareholders judge your success by, which one is the most important? And they all responded the same way. They said average revenue per user. And so when average revenue per user is high, business is good. When it's low, business isn't good. And they said, well, when a bank wants to open an account for a customer and they have to go through the KYC process, and the customer says, hey, I live at such and such address and have indicated that you, the telecom provider, are their service provider, we will actually pay you to validate that that address is matching with the KYC application. And so they essentially created a way to increase that metric for the business. And it's the same way for estate settlement. If we can guarantee that everyone who participates on the network is a net positive, we will actually create a new revenue stream for them and be able to financially incentivize them to join the network. And I guess the last thing I'll leave you with, for those of you who are building your own blockchain solutions, the great thing that we've seen with blockchain is that it allows for the creation of new and innovative business models that are only limited by your imagination. So with that, I will stop, and if you have any questions, I'll be happy to take them. Did I get to your...
Yeah. What's the current status now? So you built that framework, you're starting with the CRM with the companies that are doing trust work.
Yeah.
And what's the plan look like from here?
So we are going to be launching a private beta with a few firms in January. That's going to be a 3-month closed beta, and then open it up to, it's a SaaS platform, and open it up to other institutions.
Excellent.
Very excited.
Yeah, it is.
This is pretty cool.
Did you find cooperation with people like you're saying telcos, right? So like, I've gone through this, like I guess you were saying recently as well. You're like, okay, I want to close the account. Well, only so-and-so can close the account. So-and-so's dead. Well, okay, they're the only person who can do anything about this account. So there's something
Yeah.
And then it's like, well, okay, now you have to go through the whole other process, which they're not familiar with, and send it to someone else. And, the point being, all during this time, they're just continuing to work.
Yeah.
So, I don't know how inspired they are to cut that down from 6 months to 2 days or instantaneous.
So it's a great example that you bring up, especially for the interbank settlement piece, right? Why do banks play games with money? They want to hold the money because they're earning revenues before the account gets to leave, right? But all the CEOs have indicated that yes, we understand that there's a lot of gamesmanship that goes on, but if we can enter this network and have the rules of engagement set before, we're all going to benefit at the end of the day, because there is this massive transfer of wealth, the demographic shift that has occurred. There's going to be almost a doubling of the amount of deaths in North America over the next 30 years, and they know that estate settlement is going to be a growing business.
Yeah.
The baby boomers.
Yeah, exactly. And so they want to be able to these financial institutions don't get paid until the beneficiaries get paid.